On All About Stocks this week, the Nifty hits an all-time high of 9,000 post a surprise rate cut by the RBI. We focus on rate sensitives and tell you what's the best pick for you. And our investment advisor, Hemang Jani, tells you why you should be investing in Cipla for the long term. Welcome to All About Stocks. Thank you so much for tuning in. I'm Faye D'Souza. It was a very exciting week in the markets. We had a very positive reaction to the budget, and then on Wednesday, the RBI surprised us with a rate cut, pushing the markets to records high. After that, we saw a fair amount of profit booking. Over the next half hour, we'll tell you what you should be investing in and what sectors and themes you should focus on the most. We'll also answer the questions you sent in during the week. Remember, our email ID is at the bottom of your screen, and you can also reach me on Twitter if you'd like. Joining us today is Hemang Jani, Senior Vice President at Sharekhan. Hemang, thank you so much for joining us. It has been an exciting time to be an equity investor. But, assuming we continue to follow your guidance, which is basically buy the right stocks, hold on to them, don't make any sudden movements, there's now a general view that the market could see 33,000 on the Sensex by December this year, by the end of the calendar year. Now, given that the fact that we know that the RBI is going to continuously reduce rates for the rest of the year, it does seem like the market was very pleased by what it heard from the Finance Minister on Budget Day as well. Do you see 33,000 on the Sensex? Is that also part of your forecast at Sharekhan?
Yeah, absolutely. We think that we are in for a big bull run. And this year, we think that we would end up... for FY17, the EPS is likely to be about 2,200, and looking at the kind of earnings growth that we have in mind, we could have a forward PE of about 15 to 16 or thereabouts. That means that it's easily possible to see a level of about 33,000 to 34,000 very easily.
Actually, so tell me this now. We do know that we've had a surprise rate cut, and we're all very pleased with that surprise. In terms of banking stocks at this point, I know that you're personally of the view that you have to have banking stocks in your portfolio. But tell me how long it's going to be before we see this rate cut reflect in the balance sheets of banks. So how long will it be before credit starts to improve? How long will it be before the NPA numbers start to improve a little bit, before the rate cut is passed on to customers? So generally, when all of those things start to tick up again, what sort of trajectory are we looking at going forward?
See, there are two aspects. One is that when do we see the credit growth taking off big time? That happens when you have a lot of money being invested in the projects, and also when the risk appetite is back. Okay, we are a little away from there. In the budget, we think that there is enough in terms of allocation towards infrastructure sector. So the government spending will start. When the private sector starts investing in the newer capacities and businesses, that is when you will see the credit growth picking up big time. Secondly, when you have inflation on a sustainable basis being in the downward trajectory, and again the risk appetite and liquidity is there, that is when you will see the interest rates coming down. Yes, we have two rate cuts so far of about 25 basis points each. And we expect that in the next 1 year or so, we will see 50 basis points more in terms of rate cut. So yes, gradually we will see the rates coming down. There is going to be a pause, before the RBI cuts another rate for another probably 2 to 3 months. So we think that this is going to be a bit of a gradual process, but we are on the right track.
All right, so tell me very quickly, if you do believe we have to have banks in our portfolios, what upside do you see in the banking sector right now? And if I were to ask you to pick a couple of stocks at these levels, what would those be?
See, I think the key reason why having a banking stocks in your portfolio is a must is that, A, you will have a growth in your core business because of the investment cycle coming back, because of the credit growth, etc. At the same time, a lot of these banks are sitting on a huge amount of government bonds portfolio, and once the interest rates start coming down, you will see treasury gains reflecting in the numbers. So you will have a two-way effect on the banking stocks. So we think that it is absolutely inevitable to have the banking stocks in the portfolio. Now, talking about which banks we could possibly have in the portfolio, obviously the preference is towards the private sector banks because there is a lot of comfort in terms of quality of management, quality of growth, etc. So we continue to like the top one like Axis Bank, ICICI Bank, Yes Bank, to some extent because of the recent provision in the budget where the FI and FDI limit fungibility is there. So there is more headroom for banks like Axis Bank and Yes Bank, so you can see more upside for those in the short term. On a longer term basis, even ICICI Bank is looking pretty good. And PSU banks, obviously it's been a rough ride for them, but we think that things are settling down. And State Bank of India could be one bank that we think would do well.
All right, I also want you to focus a little bit on the rest of the rate-sensitive sectors right now. Where do you see value going forward for the rest of the year?
I think talking about the rate-sensitive sector overall, we still like auto because though the numbers were not so impressive, the recent monthly numbers, we think that somewhere down the line you will see a growth coming back big time. Particularly when you have interest rates coming down, that would aid that growth process. So within that pack, we continue to like Maruti and Tata Motors both. I think we can see decent growth from here on. Real estate is something that we are not too comfortable with because we think that A, we don't have too many good quality stock in that pack. B, some of the developers are struggling with their inventory issues. So we don't know how long will that process start. But yes, some of the quality real estate names like Oberoi Realty, Phoenix Mills, where the debt levels are not so high, even Godrej property for that matter, are some of the interesting bets that we could look at.
All right, so those were several recommendations there from Hemang to you. What I'm going to try and do is take as many questions as we can on the show as well. We have a question on banking stocks. Venkata Mahesh has written in. He wants to know, should I invest in Yes Bank, in IndusInd Bank or in Federal Bank at the current levels? Of the three, you've already mentioned Yes Bank once, so I'm going to assume that's your recommendation.
Yeah, absolutely. I think it makes sense to go for that because overall growth is pretty good. We have additional trigger in the form of this FDI fungibility thing, which is going to have a favorable impact. So yeah, I think Yes Bank is the best within that pack. All
right, Yes Bank is the choice for you. We have another question from Srinivas who's written in. He has 7 shares of Hero MotoCorp at 2,872 rupees. He wants to know if he should hold on to that stock. Would you recommend he hold on? You mentioned Maruti and Tata Motors. You didn't talk so much about the two-wheelers. Among the two-wheeler pack, Hero MotoCorp?
Yeah, it looks to be a decent bet, but if you see their monthly numbers, last about 2 or 3 monthly numbers have not been that impressive. We think that this is a temporary issue. There are going to be more product launches. And overall, we think that the rural side, the growth has not actually started in a big way, which we could see in the next probably 1 quarter or so. So from that angle, Hero Motor looks okay. One can hold on to it.
All right. Hold on to it if you're already holding it. But if I don't have it right now, does it make sense to buy it?
I would prefer some of the four-wheelers like Maruti or Tata Motors.
All right. So if you don't have Hero MotoCorp right now, don't go out and buy it. The four-wheeler stocks would serve you better. Now, what we asked Hemang to do this week is to pick out one stock that he believes makes sense at these current levels. He was kind enough to pick up Cipla. Cipla is on your screen right now. It ended the week at 739. We have noticed over this week a lot of the sort of defensive stocks came back. FMCG stocks saw a lot of focus. Pharma stocks, IT stocks saw a lot of focus. Why Cipla among the lot?
Well, if you see the overall performance of Cipla, the operating performance, last few quarters have not been that great because the company is undergoing some kind of a transformation. They're trying to get into certain emerging markets, and US, which is so big a market, they did not have any meaningful presence. So they've done about 17 tie-ups and alliances and made investment in those niche areas. So we think that that would start reflecting in the numbers over the next about 3 to 4 quarters. And we think that even the margin profile, because of the higher focus on the technology-related products, there is going to be some kind of an improvement. If you see their recent guidance for current year, they are looking at a revenue growth of about 10 to 12% with a 20% operating profit margins. And for next year, it's going to be 12% kind of a growth with a slightly higher operating profit margin. So we think that given the kind of growth that we will see because of their new initiatives, Cipla should do extremely well.
Do you have a target on Cipla right now?
We have set a target of about 843.
All right. So tell me this, if I'm a retail investor who doesn't have any pharma in my portfolio as of now, does it make sense for Cipla to be my first stock?
Absolutely, you must have pharma stocks in the portfolio because a large part of the wealth creation that we have seen over the years is primarily in the pharma and to some extent FMCG stocks, irrespective of the market conditions. So it is a must in the portfolio. Within the pack, we continue to like some of the companies like Sun Pharma and Lupin, but in terms of growth potential from current levels, Cipla looks better.
All right, so there's the verdict. You absolutely must have pharma stocks in your portfolio. And if you don't have one right now, Cipla is as good a choice as any. If you have any questions for Hemang on what you heard in any of his recommendations, feel free to write to us. Our email ID is at the bottom of your screen. Welcome back. Thanks for staying with us. You're watching All About Stocks on ET now. Hemang Jani is still with us, helping us figure out a strategy for our long-term portfolios. Now, those of you who are regular viewers, you know Hemang designed a portfolio for us on the 13th of June last year. We've been tracking that portfolio ever since. The idea with this portfolio is to create a model that you can follow and adopt in your own portfolios if you need to. I'll give you a list of the stocks in this portfolio. There's L&T, Ultratech, Vatek Vabag, Container Corporation, Engineers India, Coal India, Oil India, ICICI Bank, SBI, LIC Housing Finance, that's up 55%, Maruti, M&M, Tech Mahindra, TCS, Sun Pharma, and MCX. MCX is up 110% since we bought it. Hemang, there are very key points of pain in this portfolio. There's Engineers India, Coal India, and Oil India. Are you worried about the fact that they're dragging the portfolio down? Do you want to make any changes there? Or do you think that, like you always say, since we bought the stock, hold on to it?
Yes, it definitely is not a great thing that we are underperforming the Nifty by a great margin. In that particular portfolio, 2 or 3 stocks are actually laggards, like Engineers India, to some extent Coal India and Oil India. Now, in case of Engineers India, because of the way the crude prices have fallen, the incremental demand in terms of new capacities from petchem side has actually slowed down, and that has reflected in the weak performance in the last about 2 quarters. We think that over the next probably 6 to 8 months, you would see that investment cycle is coming back. So some of these stocks which have not performed, you will see some kind of a catch up. So I would definitely like to hold on to Engineers India. And Oil India again has been an underperformer because a government company, a lot of FPOs kind of overhang there. Plus the reforms have not really happened the way the market was expecting in the oil and gas sector. But it's one of the good quality companies. Somewhere down the line, I think this is definitely going to perform. So it should be a part of my portfolio at this point of time.
All right, so I'm going to ask you that same question again, and I keep coming back to this. For a viewer who's watching at home who doesn't have these 3 stocks, they're automatically going to think that maybe I should stay away from these stocks altogether because there's so much going on in the oil and gas space right now. It's difficult as a retail investor to sort of stay on top of all of this movement. Would you recommend in any of these oil and gas stocks to be added to a retail portfolio at these levels?
I definitely think so, because one of the reasons why this sector is underperformed is because the oil prices continue to remain in a downward trajectory. But
the the outlook on that is not, I mean, they're not expected to come up anytime soon. So what do you expect to change?
It may not come up big time, but even if there is a 15-20% kind of an uptick, the entire earnings growth model for some of these companies where the realization is coming from the oil price could undergo change. The valuation also reflects that, so that could change big time. So I think from a portfolio perspective, some of these sectors which are not looking so great at this point of time, because of that it's available at a good price point. So it makes sense to kind of add some of these quality stocks.
Give me one stock that you would add at this point.
I would definitely look at adding Oil India particularly.
All right, Oil India is a stock to add at this point. I'm going to give you a recap of the stocks in Hemang's portfolio. There's L&T, Ultratech, Vatek Vabag, Container Corporation, Engineers India, Coal India, Oil India, ICICI Bank and SBI, LIC Housing Finance, Maruti, M&M, Tech Mahindra, TCS, Sun Pharma and MCX. Remember, we're always available on email. If you have any question at all you'd like to ask us about this portfolio, feel free to get in touch with us. Send us an email, and the next time Hemang's in the studio, we'll get him to answer that question for you. In fact, let's take some of the questions, Hemang, that have come in for you. We have quite a backlog. It's been a while since you were back in the studio. Chaitanya has written in. He has 400 shares of Dish TV, which he bought at 82 rupees. He wants to know if he should hold on to that stock. I mean, the stock ended the week at, a little 50 paisa more than what he bought it at. What's your call on Dish TV?
We continue to be bullish. I think the overall growth in the subscriber base is going to be good. We would have a more mandatory, for DTH holders, few more centers are going to be covered. And the operating performance has been improving, though it's not a great performance. But we think that one should have this kind of a stock in the portfolio.
What sort of a time horizon should you have on a stock like this?
You could have a time horizon of 12 to 24 months because it's at early stage of growth. So it will take about a year or so to get that kind of an appreciation.
All right, so hold on to that stock. Let's take another question. Javed Salim has written in. He has 100 shares of Castrol, which he bought at 490 rupees. He wants to know if you should hold on to that stock. That stock is on your screen right now. It ended the week a little above 500. Now, do you expect that margins will improve now that the crude prices have come down so drastically?
See, actually, that has not happened for many of these stocks where there was a feel that it would happen. But we think that, because of inventory issues, it takes time for the company to start showing up on the margins front. Also, we think that the volume will improve in the next about 3 to 4 quarters because the prices have actually come down. And overall, it's an MNC company, so in terms of quality of the management, it's one of the best that one can have. I think it makes sense to hold on to it.
All right, hold on to that stock as well. Let's take another question. Krishna Bhatia has written in. He has 39,000 shares of Tata Teleservices, which he bought at 31 rupees. He wants to know if he should hold on to that stock. There hasn't been a lot of great news around this company. Also, it is a balance sheet with a lot of debt on it. And I'm afraid he's fairly exposed at this point with 39,000 shares on his books. What would you recommend he does?
I think there are some issues going on between the Docomo and Tatas, and this is going to take a while for them to kind of address. Tatas are supposed to find a buyer for the stake that they have, and the profitable part of the business, the subscriber addition has been great, but there are other businesses which are not actually profitable. I think it makes sense to move out of this and get into something like Idea.
All right, so buy Idea. And while you're on that thought, I'll quickly ask you this question as well. Sarvanan has written in 1,500 shares of Arcom, which he bought at 100 rupees. Should I hold on to that stock? He's losing money as well. Arcom will pop up on your screen right now. Ended the week round about 66 rupees. Also buy Idea on this count as well?
I think so. Huge debt. Now the Spectrum auction is undergoing, and we think that given the kind of shortage that they will have to bid aggressively. Overall, things are not looking great for Arcom. Makes more sense to move into Idea.
All right, so move into Idea on that count as well. We have a question on a pharma stock. Vishwa Vijaya has written in. He has 100 shares of Pfizer, which he bought at 22.06. He wants to know if he should hold on to that stock. You did say, of course, that it's important to have pharma in your portfolio right now. And of the stocks you mentioned, you didn't mention Pfizer, but would you recommend he holds on to it?
He can hold on to it, but some of these MNC pharma companies, their performances have not been that great. Only possible, upside could come in from the new product launches, or if the company chooses to take it private. So that could be at a substantially higher price, but we would not know the timing of that. But since the company is good quality, it makes sense to hold on to it.
All right. What can he expect from Pfizer going forward in comparison to, say, a Sun Pharma or a Cipla and the targets you gave us on those stocks?
See, in terms of operating growth, it may not be that great, but there is going to be some kind of a stability. And MNC's companies, depending upon their overall global strategy, if they choose to launch few more products in India, then at that time there could be a very big upside for it.
All right, so hold on to Pfizer if you have it in your portfolio. But like Hemang was telling us a little earlier on the show, if you're looking to add a pharma stock, Cipla or Sun Pharma might be a better bet. Welcome back. You're watching All About Stocks on ET now. Thank you for staying with us. Hemang Jani has been kind enough to spend half an hour with us this weekend, helping us build strategies for our long-term portfolios. Now remember, every week we pick the portfolio of one lucky viewer and we take a look at your entire portfolio as a whole and tell you what you should be holding or selling. This week our lucky viewer is Sid Devapalli. He sent us a list of stocks in his portfolio. He wants to know what he should do with these stocks. Hemang, the first on his list, 50 shares of Edwins, which he bought at 278 rupees. What would you recommend he does with this stock? Should he hold on to it?
Most of the brands that they own have turned profitable, and management has indicated that there is going to be improvement in the return ratios. So it's a good company, can hold on to it. All
right, hold on to it. Let's move on to the next one. 50 shares of Dishman Pharma, which he bought at 141 rupees. Again, this is, while we keep talking about pharma, it keeps popping up. This is not ideally the kind of stock to hold on to, is it?
Yeah, the operating performance has been weak. The return ratios have been very weak. So I would suggest that he gets out of this.
Would you like him to get out and buy another pharma stock because he doesn't have any other in his portfolio?
It definitely makes sense to go for Cipla.
All right, so get out of Dishman Pharma, move into Cipla. 60 shares of Voltas, which he bought at 244 rupees. Hold on to Voltas?
Yes, I think though performances have not been great, next I think 2-3 quarters things should pick up, so one can hold on to it.
All right, let's take a look at his... I know you're going to tell him to hold on to this one because it's also in your portfolio. He has 37 shares of Tech Mahindra, which he bought at 1882. If he were to hold on to Tech Mahindra, what sort of targets would you like him to have in mind?
We could look at about 20-25% kind of an appreciation from current levels. It's one of the best performing companies in terms of operating performance. A few more inorganic initiatives are there in the pipeline. So definitely it makes sense to hold on to it.
All right. He also has 50 shares of Zenza, which he bought at 442 rupees. Hold on to this one as well.
It's a good quality mid-cap IT company, and where we think that since the operating performance has been good, there is a case for some kind of a re-rating, so one can hold on to this one also.
And finally, 200 shares of DCB, which he bought at 113 rupees. Hold on to that one.
Yeah, overall performance is not that impressive, but within the banking space, this could be one of the acquisition targets, so there could be a big upside when that happens.
If you look at his entire portfolio, is there anything you'd like to add to his portfolio?
I would definitely think of adding Tech Mahindra. Zensar is looking pretty good because mid-cap is going to be the flavor for next probably couple of months. So Zensar is something that he could definitely look at adding.
Okay, so add to both of those stocks. And remember, if you'd like us to take a look at your portfolio, all you have to do really is to send us an email. That's at on the email ID that's at the bottom of your screen. You can also reach me on Twitter. Hemang, thank you so much for spending time with us this weekend. It's always a pleasure to have you in the studio. Before we go, of course, I am required to ask you your for a disclosure on the stocks that we discussed.
But it would be safe to presume that I personally and my company have interest in the stocks that we've talked about.
All right, that's a wrap on All About Stocks. Remember, you can always reach us, and a copy of the show will be on our Facebook page as well. Thank you so much for watching.